Yeah, baby. Good morning from my secret, shady, undisclosed location. Let's pop over on this Discord, get some other people involved here. And there we are. There we are. Let's see here. Could share my screen in there. Yeah, man, why not? What the hell? All right. So good morning, traders. Hump day. That's right, hump day. Camel is loose. Got some new monthly ranges in as well. BTC already tested his. Yes. Is BTC a male? Yeah, it is. There's only two genders, by the way. Ooh, I'm sure the algo hates that one. What are we doing? So here's Bitcoin. Here we got Bitcoin right here, right? Opens up below the monthly. Tight monthly range, right? Here it is. White cross line or red cross lines, the yellow cross line in the middle. Just happens to be the daily range as well. They're right on top of each other. So what does Bitcoin do? Bounces off the first 4-hour bottom side of the 68 through Laplace and just rips right through the monthly and the daily range. Where to? Center of the weekly, right? First standard deviation, the blue cross line. Center of the weeklies, the yellow cross line. Right now, just firmly planted right underneath this weekly range. Now, like I said, Bitcoin's already tested its monthly. Doesn't have to go down in, although it's only a couple $100. But it doesn't have to go down and test it. It really doesn't. There's a lot of, we're getting some feedbackage. I don't know. No, I don't think it was. I think we've been having, Yasha's been having a little feedback issue. It's all good. It's all good. I think when he talks, he'll talk and then he'll mute. But yeah, they got a lot of assets though that need to check up on their monthlies. I'll tell you that. Coinbase one, it's down there about $54. $54, huh? Now, when these monthly ranges get tested, do they have to do it today? Absolutely not. Usually within the first week though. So we'll see, man. We'll see. Here's what I was noticing though. Or wait a minute. We don't. Pardon me. Right? Market hasn't even opened. Well, I was up here looking at the E-minis, seeing they already got their monthly range, and so come down here. That's last month's. So this is going to be good. This is going to be good. We're going to see in real time new monthly ranges populate traditional market. Yep. But let's look at the S&Ps. Let's see here. Where are you, little booger? Dun, 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 dun. There we are. So right now, the S&P minis are below the monthly range. Here's the center up here at about a little over, tick over $4,000, $4,003. Bottom side right down here. Let's see, about 4,005. Wait a minute, what the heck is going on here? Yeah, I don't know what I was doing. 4,005 to the bottom side, for about 4,042, right? To the center. Boom. Yeah, there's just so many lines piled in here. The scale over here, if the prices are a little wanky, no problem. Top side, probably about 41, 40.77. Not bad. So yeah, we got the Dixie look overnight. All right, I'm going to show you what's up here. And hold on real quick. Let's pop. Yep, there it is. So here was the top of the monthly range for Dixie, right? When it populated, new top of the monthly. What happened immediately? And God, this really isn't good for the market, to be honest. To have Dixie come down and already rip top of its monthly range, but it dumped immediately, right? All down through the 68 through Laplace, first standard deviation. Literally, Dixie already today did a 95 for Laplace, second standard deviation move. Now, pre-market here, it's popped up right to the bottom side of the monthly range. So yeah, I'll tell you what, Dixie starts running. Definitely up here, probably to the center of the weekly right here. We'll see though. We'll see what happens. It is stuck right now below the 1SD. It is stuck below the 1SD, and you can see right now, just with this little bounce off the second standard deviation of the top side, the minis are definitely dumped out a little bit. The minis dumped out. We've got some things up pre-market. Not much. They were a lot more earlier. But as Dixie's rebounding here, yeah, everything's spilling to the downside a little bit. Got Coinbase up about a point, not even a point, 0.5. Half a handle. Let's see here. Netflix barely up, couple cents, and it was up a couple bucks earlier. I think it was up here about 325. I think maybe a few handles. Let's see here. But yeah, let's look at some crypto prices. You got Bitcoin right about 23.7. Anything popping? Solana. Solana's up 3.5. Matic's up 4.25. Got DOT up 2.6. Band up 4.6. A little renegade. AVAX up 3.5. Link up 3.1. Atom up 3.75. No real bangers today. Not yet, anyway. Algo up 3.5. Litecoin up 3.5. Not really a lot going on in crypto. Nothing really sticking out. No outliers anyway. Let's see if there is in the traditional markets. Let's see pre-market. I mean, like I said, right? We got NASDAQ about 12,033. It looks like right now. Then you got the NASDAQ minis. Yep, exactly the same. 39.61 for the S&P mini. SPY right now, pre-market down like 0.27%. Triple Q's 0.29%. IWM 0.17 down. Silver's actually up 0.5%, right? Silver was getting wrecked. Probably a good call. We were talking about it yesterday. It's beat up bad, just like natural gas. Let me see here. Anything popping at all? Microsoft up 0.4. Las Vegas Sands up 1.8. What are they doing? Baba looks like Baba's leading at pre-market. What are the Chinese up to? 5.42. What are they doing? Launching more balloons? I don't believe it. It's all lies. Let's see here. Yeah, really nothing else, man. Nothing else sticking out. Side, of course, you got Boyle down almost 4%, right? Yesterday, natural gas had a little pop. Of course, it's down today. Can't figure out what the hell it wants to do. Can you say market manipulation on the old natural gas? Yeah. Yep, probably can. I don't say it much, but strange things afoot in natural gas land, I would have to say. All right, let's go over here. Since we are waiting for those traditional market monthly ranges, let's take a look at what BTC is doing. So here's what happened. We went up, right? Crushed through that monthly, or got up into that monthly range. Let's let this UPM populate here. And you can see the bull div on the 4 hour, right? Boom, boom, boom. Last few days, bam, then it popped. So it started pumping as soon as that returns oscillator got above the zero mean, bam. And so what else? We've been showing this, how on the 4 hour, BTC was rejecting off of this reverse wave trend. Ladies and gentlemen, what happened though? Got outside the power mean band. Got actually a couple wicks. We were talking about this reverse Fisher up here a little bit over 24.1 area. Kind of got front run a little bit, right back down in the power mean band, right back down towards that reverse wave trend. Now, if I can find support up here, that is a really good. Let's check the daily out. Yeah, got a couple wicks up to the top of the power mean band, up above the 9 length log return moving average, pulled right back down inside of it. Right back down inside of it. And now if you pop up on the weekly, there we are. So we were talking yesterday about how the 4 hour was underneath the reverse wave trend, just like the weekly. The weekly has sent 2 wicks through this area, right? 2 wicks through the area. And this is actually, you got the reverse wave trend and the 99 length log return moving average, which is a bear, and they're grouped up here together. To get this move up to Bitcoin, right, I've been talking about that 32K area, and I'll show you here in a minute. Gonna have to close a weekly candle above this reverse wave trend, right? Could it happen this month? Sure, it could. You close this weekly above, let's just say 24.7 area. Yeah, close up here above 24.7 on the weekly. Could be a spur here to get this move going. Contracting volatility on the weekly, slipping down negatively correlated. I'm not so much looking for the Fisher to get run up on here at 42K, but now here's the first stop. Here's the daily. This is the 11 length RMLR. It's up here at about 25,750 area. So that's the first area I'm looking for. We're going to have to get up above that RMLR first. You can see the 30 length up above too. And we're talking that's up at about 26.6. So to get that 32K move I'm looking for, I'll pop onto the monthly chart next. I'm going to have to get above these RMLRs here. Yeah, so any above 27K, right, over the next couple weeks. Can it happen this week? It could, but look, when we're talking about, let's pop back over on the weekly. That's what I say, 27. Wait a minute. The weekly, give me 1 second here, folks. 1 second. I said 27. Okay, 27. Here's the monthly. There we go. There's that power mean. Let me scroll this down a little bit. Okay, I got to turn off this 30 first. There we go. So, right, we had a little mean reversion right here, back up to the 11 length RMLR. Opened up these last couple weeks. You can see, right, created this doji, right, last week. Big time. Opened right above that RMLR. But like I was talking about in the stream, what did it do all last week? Just ranged in between the 68.3 Laplace distribution range. Now that's Bitcoin. Here it is again, the pink dots, and they did go up a little bit. Here's the 33 power mean. This is what I'm looking for right here. And actually, man, this thing's steady rising. We got the new monthly. Hell, this thing rose up. What is it, about 33.6 now? Yeah, about 33.6. So it did go up quite a bit, which is good. So 33.6, huh? Could it happen this month? Sure it could, but we got some daily and weekly things that need to be taken care of like I just showed. Let me turn off. Let's see where this 30 is. Yeah, there we go. There we go. And if it does breach that 33, I bet this is up there right around that 42K area, 45. Not bad. Not bad at all. And so why am I showing that? What's up there at that 42K area? Here's the weekly reverse Fisher. Right, we got a lot of air in between here, man. A lot of air. So why on the weekly? This is going to be a slow trudge, man. It really will, because of the power mean band. It's starting to flip up, but you're not going to stay outside that. You're not just going to run a data set up through here, right? You will have you're going to see this data set continue to come back down and check up on this power mean until it really gets flipped around, right? This is what we want to see. There we go. The bull. Yes. The bull. But yeah, first we got this reverse wave trend. Reverse wave trend, 99 length, log return moving average. Trouble. Got to get above it first, right? Got to get above it first. 24.5 area. 24.5 area. So you pull down here on the daily again. Let's pull this up. And yeah, so the 30 lengths up here at 26. There it is. Boom, boom. So boom, 25.5. Yeah. So that'll actually got to get that weekly up above that reverse wave trend first, and then you got to tackle these daily RMLRs, and then start making its way up to the top side. But just because how far below that power mean band is on those macro time frames, I can tell you one thing for sure. Right? Bitcoin's going to go up, down, and sideways. If you're looking for signals, there you go. Up, down, and sideways. Who do we got in the chat? All right. So now, we did get the new monthly. We're going to look at this chart real quick. Obviously, I'm not going to get my variance isn't going to pop up. The entropy isn't going to pop up. There's just not enough history in Bitcoin, right? You can see another thing, just like all these, like on the weekly, like the 4 hour we just reached. Now, is it going to roll? Is this volatility going to roll to the top side onto these macro time frames? Because the weekly stuck below the reverse wave trend. So is the monthly. Look at the monthly. It's going to wick right through it, right? Here we are now this month. Let me see here. Wow. And so the only log return moving averages that'll populate 9 length and the 33. Getting ready to cross down the 33 on the 9. We do not want these to cross down this wave trend. All right. If we're looking on this monthly chart, there is a lot of overhead resistance here. Big time. And you've got contracting volatility so far. This new monthly candle positively correlated. Volatility comes in here, right? If we get a boost in volatility, this price action will go to the top side. So that being said, now here's all this bull div. Look at all the bull div from the initial move from the highs, right? From the initial move of the highs, here's the low on the returns oscillator. Ever since then, right? Nothing but lower highs, lower lows on the data set. So all that bull div played out right here on this monthly candle, bam, right up to the reverse wave trend. But here we are setting up. Yep. Now, and here's the area where we're setting up some hidden bear divergence right below the wave trend, right before these moving averages, log return moving average, are getting ready to cross each other and down through the wave trend. They both already crossed down, just like the reverse wave trend crossed down the 33 power mean. Some things are going to have to change here. Volatility needs to come in on Bitcoin. This thing will slip. Yes, it will. Let me see something real quick. Oh, not rich dad, poor dad. Yeah, go hide somewhere, dude. Robert Kiyosaki. Let's see. We're positively correlated here on this down move too. So you're hanging here up here on this monthly, on this macro time frame underneath that wave trend, reverse wave trend. Got to get that correct so people understand. All the fissures though, all the fissures are up now. Like to see that for sure. But there's only one above the mean of the bands. So this is going to get interesting on Bitcoin, man. We do not want to give away this move, right? I don't want to see Bitcoin back down in the teens again. Let's keep this momentum going as a holder, right? Let's go. Let's go Bitcoin. Okay. Monthly, drop down here in 4 hour. So there, right? All these lower lows right here, you can see the returns oscillator. Higher lows, boom. When the move go, I just showed earlier, right when we crossed the zero mean, up we go. All the fissures flipped at the same time too. DLP popped, started having an outlier on the variance, right? Started having an outlier on the variance. And not only was there bull div on between the returns oscillator and price action, there was definitely on the Z-score as well. Z-score of log returns. So that's the thing. We use the Z-score of log returns, not price action. No such thing anyway. So yeah. Contracting volatility negatively correlated, right? Price action is walking up on the 4 hour. That's what I'm seeing happening. If this variance wants to come back down and stay, and if it stays negatively correlated, that is a good thing for the data set. Through all this, right? Price action in a total random walk. Total random walk right now, ladies and gents. Let's drop down through here real quick. Dun, 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 dun. You know what? On the daily first. Let me see something. Yeah, there's some. Actually, hold on. And I do like that on the daily too. Like, look how tight the power mean band is. And on the daily, we are above that reverse wave trend. Right back up, almost back up above that 9-length log return moving average. Good stuff. You got the 33 crossed up the 99, 33 crossed up the wave trend. Yeah, man, good stuff. Trap though, right? Price action getting squeezed right in between these moving averages right here. And don't get it twisted. We don't use exponential or simple moving averages or any other of that voodoo TA stuff over here. No, we don't. Everything's based on the returns. Let's see. Is there any? Yeah, we got a little hidden bear setting up. Not a lot. This Z-score is ready to pop too, man. It has been down here by these confidence intervals on this daily, right? Since we got that local high, just been hanging out, waiting for another move. I like the volatility contracting negatively correlated. That helps, right? This candle walked right up to almost the 95 for Laplace on the daily candle already. Let you go over here. There it is right there, that white cross line. There was the wick, almost got to it. Why didn't it? Well, there's the top of the weekly range, right? Right below it. Like I said before, a lot of macro time frames, and then on the daily, you got a lot of overhead resistance here on Bitcoin. Gonna need a potent little volatile move, bust through these areas. Now we can drop down. I just wanted to take a quick peek at that daily. Only 2 of the 4 fissures are up. Okay. So here we go on the 90-minute. I think we showed this yesterday. Lucky. All right. When did that wave trend cross down? Fissure. Up here, what was price at? Yeah, 24,470. That was the last time on the 90-minute cross. Getting ready to have a cross back up. This is looking, actually, to be honest, is looking pretty bullish. This pullback, why? Well, we're getting ready to have these little intersections here, these crosses. Wave trend above Fisher. The, what is that? The 33. Yeah, that's the 933. That is the 99 length. Okay. So if we get the wave trend, the 9 and the 33 lengths moving averages up above that 99, up through the Fisher, a test here is no doubt, which it's already made a nice run towards it. That could be a test. It looks good, though. It does look good. So let's see here. Setting up any hidden? Yes. As a matter of fact, we are setting up hidden bull div right now, right? Between the returns oscillator and price action. And we are above that reverse Fisher. That is good. This plays out. If we see a positively correlated candle down here on the 90, good stuff. Let's see what the 45 is telling us. Yeah, there was the hidden. Boom. Just nothing's playing out yet. Got no correlation on the returns oscillator. But look, the returns oscillator right now on the 45 is just now crossing up the zero mean. Just now crossing up with what? So if you spread this out a little more locally, got a lower low here on the 45. Here we go. Here's the bull div right here. All right, you got bull div on the 45-minute returns oscillator, and it's just now crossing up the zero mean. You're usually going to get a good move. Random walk. Volatility's crushed. This is everything you want to see right when you're crossing the zero mean here. You got volatility as well down. The 981, the 2400, literally are both sitting about a 40 read, literally going sideways. Going sideways. Let me see here. 981's contracting as well. So yeah, that's why this thing's starting to walk a little bit. 2400 though, is expanding a little bit. Looks like it's expanding a little bit. So let me switch this up. What you doing, girl? Got a snoring dog? You just woke up. What the hell's wrong with you? Yep, negatively correlated too. Okay. Let's flip this back to 1. That's all right. That is all right. This actually looks good for a little move here, although you are at the top side of the power mean band. But this thing, right, this low time frame, this thing will fly. This thing will fly. You can see it was tight, very tight. Got a lot of volatility on this time frame. But it's just now starting to spread. Everything's above the Fisher, that's what you want. You want everything above the Fisher. But right now, right, just like we set up the bull and we're crossing the zero mean, at the same time, it's setting up hidden bear. Setting up some hidden bear div. I'm waiting for some trend here. This is what you want, right? You want some trend. You want some trend. Or if you know about our prediction model, look where the predictor flipped. Even if you wait a candle, get a little confirmation, you're in right here, right? This would have been the good entry. Because this would have you would have got out of your position, right? You go down and test the 95 for Laplace. I mean, perfectly, I might add. Got a wick right to it. You're out of that position. You're out of that position when you drop below the 68.3. But we don't trade to 45. It just helps us with our workflow, get our bias, right? We're trading down here. So we wouldn't have got that bad entry anyway. We would not. The entry probably would have been on this candle, obviously. And there are a lot of 1 minute, 3 minute scalps on these 45 minutes. And that is actually a great strat that I don't really talk about a lot. But when I'm actively scalping, right? People that know me close know I got a 45 up. Got a 45 up, 15, 3 minute chart. And then I'm waiting for the confluence between those 3 time frames. That's really the secret. That's the key to get these great entries. You got to wait. You got to figure it out. This took a lot of time working with these indicators. Working with the charts, man. You got to put in the time. You're not going to just jump into this low time frame scalping environment and survive. If you don't, it takes time, put it that way. You got to know what you're doing. Not only reading your charts, right? You got to be a bot. You got to trade like a bot. It's fast. Everything's happening fast. You got to be just as efficient with the exchange you're using, in and out of trades, understanding how to operate your actual exchange. At the same time, getting reads. I mean, this is not easy. That's why a lot of people aren't professional traders, man. Right? Not a lot out there that actually every day, man, you're sitting at the freaking computers, you're intraday trading. Those are the real traders out there, man. Keeping everything alive, keeping this volatility rolling. All right, let's see here. Anything else popping here on the 45 I should be aware of? Not that I really see, no. Like the volatility read, though. Something definitely. You can see the predictor just flipped, heading back into randomness. Look out. Look out. So we'll be watching Dixie, and Dixie is dropping, right? VIX was dropping. It's been raising up just a little, just a tick. And we're delayed on the intraday volatility on the CBOE, so we're going to have to wait a little bit after the markets open here in 5 minutes. Get a read probably about, I don't know, 10 o'clock. Yes, for sure. I see in the chat. Yeah, if anybody listening, right? You want any assets covered, pop them in the TV chat. Or if you're in the Discord, you can pop it in the general chat in the Discord. Dun, 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 dun. That's about it. Except look at the 33. Right? Look at this nice slow burn here on this bull div. Right? And that's just now crossing up the zero mean. Bull div. What is it correlated? Let me expand this a little bit. Positive. Look out, guys. This thing's about to pop. Thing's about to pop. Watch the trend. Watch the trend. You got the 981 printing zeros. You got the 525 printing zeros. 2400 going sideways. This thing right now, this is a perfect example of like an ebb and flow of a contraction right into an expansion and a pump. Now look at that correlation change that quick. Funny. We need that. We need that positively correlated. There's no doubt about it. We got 24 minutes left in this candle. I do like it though. And there was bull div on the Z-score as well. Bull div on the Z-score, bull div on the returns oscillator. And like I said, 33 minute and 45, it's just now crossing the zero mean. 15 minute, huh? Yeah. Boy, there's that Z-score div. Bull div action. And it's just popping out of these lower confidence intervals. Good stuff. That's about it though. On the 15 minute, just on the Z-score. Yeah, no Fisher action. DLP right at the end here. A little bit of div. Contracting volatility though, negatively correlated. This is what you want to see. And when you're negatively correlated and volatility is contracting, it's an ebb and flow. Think of it as just wham, expansion and volatility, correlation all the way to the bottom. It's going to break, going to go positive. And on the 15, we are just data sets trapped between these moving averages. It's right in the center. It looks like of the power mean band, but holding steady above the wave trend. That's the thing on this 15 minute. If you see it drop below this wave trend, look for the 99 length log return moving average. Look for the 15 minute Fisher down here. It's only a couple $100, but yeah, that thing will slide quickly if it does go. Yeah, that's about it on Bitcoin. Bitcoin looking good though. Bitcoin looking good, resilient. Every time everybody tries to bury it, oh, now Bitcoin's going back into bear, right? What, has one down day? People are funny, man. People are funny. It's very obvious bulls are in control, especially on the BTC data set. And, you got YouTube Jimmy out there telling you to look at levels. And I'll look at a number that they shoot, and I'm like, what are they even looking at? Because it's not going to match up anything on our charts. Like we were talking to somebody yesterday saying, oh, wave 5 of Elliott wave or whatever. Elliott, wave your money goodbye, right? Just like ET phone home. Get on your little bicycle and just fly to the moon with ET because, buddy, Does that stuff work sometimes? Yeah. And so everybody think it's great. It's not, man. It's not. Don't you want to get a good read on these markets? Come on, people. Come on. You're being manipulated. You are being manipulated. Where I can show you where power means are and reverse mean of log returns. Real areas, right? Real areas that give you actionable intel, man, that you can use. Not just guessing, not looking at fib numbers or any silly stuff like that. Support and resistance on data sets. It's a coloring book for adults, man. That's all chart art is. All right. They were kids, man. They couldn't color inside the line. So you become adult and you just start drawing all over your charts again, making a mess. It's ridiculous. The only thing we put on charts are honey badgers and stuff, right? We like to overlay pics and have fun. Get bored as a trader. Got to play a little bit. Got to play a little bit. And here goes the traditional markets. Let's flip over on SPY real quick. Yesterday, woo, and pre-market down. Now it's down almost a point. Okay. All right. So on the 15. Yeah, boy, oh boy, oh boy, oh boy. Let's see something real quick. Okay. We need the new monthly. There we go. All right. Is that the bottom side? Yes. So here's the bottom side of the monthly up here on SPY. But about almost 400. Almost 400. Do these areas get tested? Yes, they do. Keep an eye on the dollar, though, right? Keep an eye on the dollar. 100%. See what it's doing. And if you look at our video from yesterday, we did an update on Coinbase. I mean, just nailed the analysis, right? What was I talking about? I was doing that live stream when Coinbase was up here running to this 95.4 Laplace. First thing I noticed, here was the top side of the daily volatility range. Data sets don't close outside there. So when everybody's probably buying, right? Alpha trader, no, I'm not buying. I'm waiting for this daily to close back inside the top side of the daily volatility range. Did it? Yes. Look at the last hour and a half. Pulled right down below. Literally checked up on the 4 hour 68.3, pulled back up above the first standard deviation. And if you go to that stream yesterday, I said this data set is going to go down and close a little bit under $65. And people are like, well, why? Well, because that's the top side of the daily. Did it? Where did it close? Yeah, man, it closed at 64.81 or something. Beautiful. And that's just knowing how to read these charts and knowing where the data set is, right? Knowing that you're outside the daily volatility range, right? You're out here, right? You just went through the front door of your house. You're running down your neighborhood street and you got your underwear on, right? You're freaked out. You have no idea where you're at. Oh, I got to go home. Yeah, you're not going to get outside these very often, man. And that data set proved it. And here we go. Okay, Netflix. Got a big. Who's that? Is that Bull Jesus? Is that Bull Jesus we see? Goodness. Let's see what happens with the dollar. Why don't you just go home, dollar? Get back down around 102 or something at these markets. But you're going to see there's a lot of these monthly ranges. A lot of the monthly ranges, these data sets are going to be below them. So they're going to make a charge. Well, here's the bottom on Coinbase. The bottom of the monthlies at 66. Woo! I'll tell you what, man. Coinbase, where's it? 68.71. Because a lot of these data sets, they want to get into the meat of the monthly. That's actually like BTC, tight monthly range. What's that telling you, right? What is March? March is the last month of the first quarter. Look out, man. Look out. March could be big for Bitcoin. That's all I'm saying out there. That's all I'm saying. March could be big for crypto. Yep. And everybody's like, well, crypto's a scam. No, man. It's really not. It's actually very secure. You just got stupid people out there, right, that don't understand what it means to be your own bank. I hear people talk about this all the time. They're like, oh, I know what it means to be my own bank. You don't even have a hardware wallet, clown man. I mean, banks have safes. This is why people get scammed. Number one, they don't have their assets, right? They don't have their Bitcoin or their NFTs or whatever the hell else, right? Your stocks. I mean, God, can you even throw stocks on a hardware wallet? I don't even know. I don't think you can. But anyway, when it comes to crypto, you are your own bank, man. You have to secure your stuff. And a lot of people don't have hardware wallets, which is a shame. And then they allow themselves to be socially engineered by scammers. So when you see people out there talking about, I got hacked. No, they got scammed. You don't get hacked, man. Right? You get scammed. That's how you get hacked. You get scammed first. You're clicking on links, right? You're conversating with people behind the scenes you should not be talking with because they are socially engineering you and they will steal everything from you. You might think they're your little magical online friend until they rob you blind, and then you'll be like, what just happened? Be careful out there. A lot goes into being your own bank. It sure does. Like these big banks, they take their security serious, right? They still get breached sometimes. I'm sure you just don't hear about it, but yeah, man. Hello. Who's speaking? Man. Speak, Yasha.
Do you hear feedback, or is it good now?
Let's see. You're good. No feedback, sir.
Right on.
You must
No,
be
I was just
using the
thinking.
Hello Kitty
Well,
headphones.
yeah. No, I was just having some thoughts about what you're saying, especially there's a lot of what you're saying about being your own bank, etc. Also knowing where and when to store your cryptos and stuff, especially when you see like a lot of you know uh, FUD or whatever about different crypto projects, etc. Uh, Solana being one of them. Right in the last week, they had another outage, so everybody who's like a critic or a skeptic or whatever was like, "Oh, why would you stay in that project or this and that." Like, yeah, okay, it's unusual for a project to have so many outages, but then again, it's also unusual what they're doing. So it's kind of like par for the course, actually, if you know about development. And it's not a reason to panic or anything. I'm not saying buy SOL or sell SOL or anything. Do what you want with your coins, but it's like you have to know how to parse the information that's out there just as much as you have to know how to keep your assets secure, because people really make a lot of wrong decisions when it comes to keeping their own funds secure. A lot of it based on really bad information too. And so it's like you need to know both what's in the noise sphere, and also you need to know the basic fundamentals of how to keep your assets secure, whether that's on a cold wallet or anything in life, right? But yeah, that's just a thought I had about that, because you were mentioning stuff like that.
Oh yeah.
And yesterday, actually, that video where you were doing the analysis on coin, I mean, that was spot on, man. I just have to say, for those of you who are watching, especially if you're watching on like YouTube or wherever, or Twitch Trading View or whatever, you are in a rarefied class of people. You are here watching something that very few people get the chance to see.
Come on.
And when I say get the chance to see, I mean literally to find these videos. We know it's not easy. So we know it's not. We know there are challenges to doing that, and we know part of that challenge is because there's so much noise coming from the other camp that would love to see nothing more than the average retail trader do the normal thing that just get 99% of traders wrecked.
Yeah.
And we're here to do quite the opposite. We're here to give out information on how to actually learn to do something valuable with tools right here on TradingView. And the analysis that you see here from Bilbo or whoever talks about stuff here and knows their VEPS is really invaluable, man. So if you're new to this place, thanks for being here, and also you count yourself privileged, because I can tell you, we definitely know it's not easy to find. We understand, but you did, so congratulations.
Yeah, exactly. Yeah. That's the thing. It was like we go against the grain, right? We're not in the echo chamber with traditional technical analysis, man. We're just not in that echo chamber. Yeah, we know it doesn't work. And it's not like we're just like we've never used it before. We're just like we have this massive bias because we created this trading system. It's like, no, that's not why at all. Yeah. We all used it before. We've all been wrecked using it.
We are aware of the noise. We just don't trade based on the noise. If anything, we look at that noise and we're like, so that's what the herd is doing today. They're splitting this way and that way on this silliness. Mm-hmm. Just tells us where to line up more trades, to be honest.
Yeah, you'll notice you go on to any of these other streaming platforms. Look at all the other videos, and the first thing you're going to notice is usually we are right on the other side of what they're talking about. They're bearish, we're bullish. We're bullish, they're bearish. I mean, that's just the way it works. It's pretty funny because we're using a whole different way to go about these markets. The way the high frequency trading firms go at them, right? That's what we're doing. And so we're going to be on the right side of the trade.
And they're giving these like long-term project, like daily or weekly or monthly like targets that get in now to hit this target. Like, dude, there's going to be 1,000 more trades between now and then that you can do. And there's going to be millions of trades that the HFT bots are going to do between now and then. So what are you talking about?
Yeah, man. Like, it's crazy. It is insane. But hey, man. Whatever, right? What we like to say, it's like we don't have to be sharing. The first thing people will come on to one of these streams and they'll just be like, I don't know what they're talking about. I've never seen any of this before, and because of that, I'm going to I'm not going to watch this. Right? I don't understand it. Where you don't see anybody else talking about it, it's because nobody else does talk about it. That's the problem that people need. That's the problem that people need to understand. The other people that are using this stuff, they don't want to share it. That's what I was talking about behind the scenes. Usually, when you get a group of guys together and they build a proprietary trading system, they're freaking starting a hedge fund or something. We built this system to share with retail traders, right? We're tired of seeing people losing money. We don't want this stuff to be a secret anymore. And we catch flack for it. You would be shocked on how much we are targeted. Small YouTube channel, and we are so shadow banned, it is ridiculous. You'd be surprised.
Yeah. I mean, if we're not, the statistics are just extremely improbable that it's a heck of a coincidence like this.
Yeah, man.
For so long, it's insane. So yeah, we don't like to harp on that too much, but we know that this is a rarefied experience. So like I said, if you found this one, congratulations, because we know it's hard to find.
Mm-hmm.
We know.
Yep, we
and
do.
those of you who know with me, you know too.
and we appreciate TradingView giving us an opportunity, a platform to talk about the way we trade, which they should.
Absolutely.
We have supported TradingView since day one. I mean, hell, Jesus, how long have I been paying these guys? Since like late 2015, I think.
Something like that. And something also, like to be honest, 2016. We get a better here because it's the right audience of actual traders who are using TradingView tools. So it makes sense for us to be here. But it'll sure be nice to see more folks even show up, and that's great. So finally, I think we might have found a platform where these kind of analyses can be found more easily. But still, even on TradingView, it's still pretty hard to find, and hopefully it'll get easier over time.
Yeah. And there's a lot of streamers out there that really aren't going to help too much. Hey, man, all you got to do is message us on TradingView. We got links below. Vacation. We even have a free trial for our indicators. So that's enough shilling on that, because we don't like to shill our indicators. You either see it, you're going to start watching us, you're going to start learning, and then you're going to get interested. Or, you can go back to the other camp, which is fine. And I didn't finish earlier saying we like to share this stuff with retail traders. But at the same time, hey, man, if this isn't your style, you don't want to come in here, we need liquidity on the other side of our trades, right? When other people are trying to shill indicators and stuff, you'll notice the first thing Alpha Trading does is be like, hey, this might not be for you, right? That's why we tell people, come in our Discord, talk with us, see what we're all about. See if you like it first, right? We'll even give you a free trial. See if you can figure some things out in a couple weeks. And if not, you can move along. But I guarantee you'll never hear any of them say, we don't care if you come or not. Because you are just unlimited amount of liquidity on the other side of our trades. That should be very shocking to you as a retail trader to hear people say that, right? That we don't care if you come and you start trading like Alpha Trading does. We really don't, but we're here to help you. That you should realize right off the bat, okie dokie, what are these guys up to? Because we found the way, man.
Shout out, man. Shout out, because it's so true, man. Like the 1 in 100 or the 1 in 200, we're gonna get this enough to be like stick around and learn something.
Yeah.
Congratulations, all of you. Hats off.
Yep.
For sure.
We're looking for those retail traders that they all have dreams of being professional traders. These are the people we're looking for. We're not looking for the signal chasers, anything like that. We're looking for the professional traders. We're looking for the market makers, right? We're looking for, I'll tell you who we're looking for. Poker players get this stuff, right? Poker players understand statistics, understand the probabilities, and they catch on quick. You'll be shocked. We got one in our Discord, and he's just running like a wild bull now. I love it. I go in that first thing I do in the morning after I meditate. I'll pop up our Discord and I'll just read through and see who's posting and stuff, and I just smile, man. I'm just like, these people get it. Some people get it, some people don't. Right? The ones that get it, man, you shine. Once you learn this stuff, you just shine. It's a no-brainer. It works. It literally works. You can trust your
And we're
edge.
to answer the questions, and you trust your edge. Exactly. Our tools work so well. After you learn them, you will learn to trust them on your own without any convincing. You don't have to be sold on the idea.
Yeah.
They work. You can literally see it.
That's right. That's right. All right. So what are we doing here? Got the dollar showing a little strength. You know, it's inside its monthly range. That's the first thing that happened. This dollar came down, tested up this second standard deviation, normal distribution. Right? These algos are running the distribution. You need to understand that. They're running the distribution, especially the ones that matter. There's a lot of algorithmic trading going on out there, but nothing compares with these high frequency trading firms and how they're programming their algos. And it's people are like, well, I want an algo like that. It's like, no, you don't. Because you can't afford it, number one. Unless you are the 100 millionaire, whatever you are, because they are pricey to build.
If you have 2,000 employees to staff at 24 hours a day, 7 days a week, all around the world.
Yeah, sure. Man. Yeah, takes a lot of people. Takes a village.
You got engineers, you got market makers, you got brokers, you got all kinds of people involved in the mix on those gigantic bots. Those are not just like simple retail bots where you plug in your order and see it automatically happen according to your MA strategy or whatever. Like, no, right. That's not how they work.
That is not
right. Use these maths. They use these maths, even if they visualize them slightly differently. They use these maths, and their bots calculate based on these maths. Absolutely, 100%. In fact, some of them are not even advanced enough that they even trade using the latest things that we have, because we're frankly so cutting edge. But they all will, and many of them already do. And we'll see more of that over time. Like, they are very cutting edge. So are we. We just have incredible indicators that show the relevant math and areas based on math.
That's right, Kitty. Kitty's a volatility trader. Yeah, you still got Bob up. But yeah, and you'll hear us. You know, we like to go through these markets, but then again, we like to educate as well. So you'll hear us all the time, start talking about stuff. Bear with us. Okay, so here we go in the 15 minutes. So SPY pre-market, whoop, right down to the wave, or right down to the reverse Fisher in the 15. Going to bounce here? Probably. And like I showed Bitcoin earlier, and here's the thing too on SPY, right? 15 minute going all day yesterday. Look at this thing. It was doing nothing going into today, but setting up bull div. Had a spill out right pre-market, but man, this thing is ripe for a pop. When you see all these Fishers turn up on the 15, it's looking like the trend to the downside almost over. The entropy has turned back up, right? Now you had volatility expanding, right? You had volatility expanding right here, negatively correlated. And you can smooth this out just with a longer length. If I put this on the 10, this would be negatively correlated probably from about, yeah. Actually, no, this 5 length's good because I am on a 15. Now, the higher time frame you go, you want to spread that length out probably to a 10. And I'm talking about the correlation. Give yourself a little more room. But on these low time frames, a 5 length is perfect for this volatility. And the correlation breaks, I mean, it's so powerful. This is how you can scalp these low time frames. And 15 minute, this is a high time frame. People get confused on what high time frame, low time frame. Low time frames, you're down here at the algos, 1 minute, 3 minute, 30-second chart. For God's sakes, if you're that good to trade a 30-second chart, you're my hero. I don't even dare go down into the 30-second realm. Just not quick enough. I mean, you got to be in and out. You almost need a bot. If you're trading a 30-second, because it's such small percentages you're scalping off. It's got to be automated. I mean, I can't do it. Okay, let's see here. So what I want to do is pop this on coin. Coin's hot right now. Why is coin hot? They're talking about, regulation fears are diminishing, this, that, and the other, blah, 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 blah. Meanwhile, look at coin run. Run, little Coinbase. So let's look at, yeah, hidden bull, not correlated yet. Just Coinbase hasn't been listed long enough, so you really can't get a good macro time frame. Even the 5-day, which you should be looking at. If you're looking at a traditional stock, looking at a weekly chart, don't look at a weekly. Look at a 5-day. Don't look at a monthly. Look at a 21 or a 22-day. I like the 21 just because I'm a numbers guy. 2 and 1 is 3. And I love the 369. Woo! Whose head that just go flying right over? All right, let's see here. Oh, yeah. Oh, yeah. Let me, coin is, let's see what this looks like. Yeah, you're above everything. You got room to run too. Top of the power mean bands up here at about $69. Is that a possibility today? 100% it is. Coinbase is on a mission. I bet $69 is probably center. Center of the monthly. Ooh, close. 68.68. What's the top side? 70.5. Coinbase is breaching the bottom side of its monthly range right now. If you see Coinbase today run to the top side of the monthly, 70.6, that's the first standard deviation. And if Coinbase today can close above like let's even say $71, Thursday, Friday this week, you could see Coinbase absolutely explode. Because do I think Bitcoin's about to? Mm-hmm. Or like I like to do to kids, yes. do the old fake out head nod. That's my favorite. That really confuses the kids, right? No. Yes. They're like, what? All right. That's enough, clown man. So you got Coinbase busting, but look, right? Sent a wick right to the bottom of the monthly range. And people think that this indicator is just a lot of noise. You guys, it's not. Trust me. You use this for a while, it just blows your mind. You should see our Discord. People come in all the time. What the heck? It's like, yeah, man. It's the way it does. It's a great indicator. It is a great indicator. Nothing new, right? We just spiced this baby up, right? We made this our own. Nobody's using the distributions out there. If they are, they're trading options, right? Nobody has been able to figure out how to take volatility, right? How to take volatility and trade like future delta with it. It's hard. It's hard. You can't do it with traditional TA. If there's people out there saying that they're great low time frame scalpers, number one, their low time frame scalps probably like they're swing trading the 4 hour saying they're scalping. It's ridiculous, and they're still losing. You can't swing trade volatility. You got to be down here. You got to be down here where the algos are running, man. This is why we use what we do, because it helps us recognize when those algorithms are taking profit, when they're getting entries. When and one of the biggest things is when the divergence is building between the returns and price action. Do you think these high frequency trading firm execs, you don't think they know about this stuff? Oh yeah, they do. They know price action follows returns. They're all about the returns. Who isn't? Right? And it's in the wording. People are always like, what are returns? It's pretty simple, right? It's a return on your investment. When you get the divergence between price action and returns, it's literally telling you either that it's time to get an entry or it's time to take profit, right? That the return on your investment that you've made is diminishing. That's the way I like to put it. So literally that imbalance in the buy and sell pressure that's building is literally, it's warning shots across your bow. Take your profit, or the algos are going to take it from you. And we know on these low time frames how fast these moves go. You got to know where the distribution levels are. You got to know where these daily, weekly, monthly volatility ranges are. If you don't, what are you using? An exponential moving average, right? The cloud. Where are you taking your profit at? Fib levels? You're swing trading volatility, man. You can't do it. You can't. You can, because hey man, I like to spend money. I like fun things. So if you want to be on the other side of my trade, knock yourself out, man. And I don't say that like in a ego bragging way. It's the freaking truth. We all know that. Everybody that's joined Alpha Trading finally starts to understand what we've been talking about for years. Because I said it earlier in the stream. Usually when retail traders are getting entries, they're the liquidity for our exits, right? When we're taking our profit and taking our exits, they're entering. It's just the way it is. We are always on the other side of the retail traders' trades, just like the high frequency trading firm algorithms. Okay. I mean, I could scream from the mountaintops about this stuff, and I have before. I used to live in Tahoe, go up there and hiking and just be like, why is everybody so stupid? It's okay though. We will bring you in and we will rehab you at Alpha Trading. There's nothing in the world that makes you feel like bigger shit than, well, when you lose a lot of money in these markets, it is crushing. Crushing. I mean, I know people that have been liquidated and stuff, and it mentally screws you. I mean, you're scared to death of the markets now. And you definitely don't trust your indicators, right? That's one thing you can do at Alpha Trading. You can trust your indicators. That's what you learn real fast. Because when you don't trust the Alpha Trading indicators, you're screwing yourself, right? You're going to get bad entries. You're going to get bad exits. You're going to be emotionally attached to your trades. You're just going to be a total head case. You got to trust your edge. And the edge is just more than the indicators. You got to know when to take profit. You got to know when to limit your loss. And when I'm talking about limiting losses, when I'm trading on the 1 minute, 3 minute charts, if that data set, this is how much I believe in my indicators and my entries, that when I get my entry, if that data set turns around and closes a 1 minute candle, a 3 minute candle below my entry, I don't have a stop loss. I'm waiting to see what the data set does when I get my entry. And if one candle closes below my entry, I get out of the position. I don't care if it just dipped down below me for 1 minute and then went up. I don't care, because we know how these markets work. You start doing that, it's a slippery freaking slope. Because then what? So, okay, what percentage are you finally going to get out of that trade? You got to get out immediately. You got to limit your loss. Because if I think that it's a great entry, but something happened in the volatility and that data set dips below and I get out, I am happy. I'm proud of myself. Good, right? You stuck to your guns, man. You're doing exactly what you should be doing. Continue. And I immediately, instead of going, damn it, I got a bad entry and freaking out, I'm not emotionally attached to that trade. That's what allowed me to get out of it, right? And we're talking about big trades, right? I'm going to lose some money, but I don't care. I didn't lose a lot because I limited it. And then I'm immediately looking for the occurrence to get back into the position because I know what I'm seeing on the charts. I just got the bad entry. And guarantee you within a couple more candles, I'm right back in the trade, usually right in the same direction. But I'm not going to take that chance of that data set ripping to the top side or the downside, and I'm on the wrong side of it. Not going to happen. Not me. No, thank you. I've been liquidated one time. That's all it should take for anybody. But I know people every week. It's just gambling. Go to the casino every week. You know, they'll throw like a couple $100 in an account and just use 50 to 75x, 100x leverage. They get liquidated. Boom. You're just contributing money, right? To people like me, to the high frequency trading firms. For goodness sake, stop. Come learn how to volatility trade. How's that? Make you a deal. We'll teach you for free. Who else is doing that? Nobody. They want you to buy. They want you to buy their courses, their trading courses. And it's always on traditional TA. So what are you doing? You're literally paying to screw yourself. It doesn't make any sense. Well, that's why we don't charge for the education. And we want you to have the indicators for a little while. See if you like it. We want you to come into Discord. See if you like it. We're a great group of people. All walks of life. All walks of life. We got market makers. We got goat herders from Africa. We got, where's the warlord? He's laughing right now if he's listening. We got professional poker players. We got a wide variety of people, right? We got moms. We got daughters. We got sons. All kinds of people. It's good stuff. So is there anything... Let me see if anything ran off. Bob actually pulling back. I'm always looking for those outliers, right? Why? Well, when we're on this stream, I'm looking for these outliers so I can pull the chart up and be like, there you go. There you go. To show you why. Show you why these things are moving the way they do. But yeah, nothing really. And Bob is starting to really pull back. I don't trust those Chinese stocks, man. Same with the cryptos. I won't even play with them. Won't even play with them. No need to. Plenty of stuff to trade out there. Plenty of stuff. Everything's kind of going sideways right now. I mean, you got the dollar. The dollar's up inside the monthly range, right? Making an attempt to get to the bottom of the weekly. Now, what would be great if this dollar stays below the 1SD, starts bouncing around in between the top of the monthly, bottom of the weekly. Good stuff, man. Oh, wait a minute. Or is that the bottom? Is that both bottoms? Hold on. Yeah, that's exactly what it is. No, it's the top. So you got top of the monthly, bottom of the weekly. You got this little void in here where this data set's just going to run wild. But when this thing gets to the bottom here in the 1SD, you're probably going to see these algos kick in, right? Right now, what are the algos doing? They're buying, man, right? They're buying. They're coming. The probabilities are literally telling you that. There was a 4.6% chance the daily candle was going to close below here, let alone 15-minute candles. That the daily will not close below this second standard deviation. So what do the algos do? They turn on the buy mode, man. And now what's it going to? Especially, and look at all the indecision. Look at the algo battle that was going on right here, right? On the low time frame. You go to a 1-minute chart, this is all over the place, man. This is all over the place right here. Guarantee it. But look what they're checking up on, right? And this is how the bear and the bull algos, they'll test each other, man. And so as soon as the bulls got this inside the monthly, them bear algos, man, they were selling. The bulls were kicking it right back up. So now it's likely this is going to the bottom of the weekly, 104.54. Not much, but yeah, probably on its way up there, especially this is the new 4-hour. Let's see here. This is the first standard deviation on the 4-hour to the top side, right? It's up above it right now. Will this 15-minute candle close above that 4-hour level? If it does, this is a no-brainer. Might even run to the middle of the weekly. We'll see. I would expect a rejection here. You got the first support level for the daily, first standard deviation to the downside, and the bottom of the weekly range. That is a lot of overhead resistance, especially on the daily. That daily resistance level, that thing flips, or that support level on the daily, the green line right there, that will flip to resistance and hard. And it's right at that weekly and that first standard deviation, man. So I would assume, right, and I don't like to assume, but because I trust my indicators and what I'm reading here, that we're going to get a rejection here. And this data set could get trapped up here for a little while if it doesn't just rip to the downside. But it is the dollar. When those dollar bulls turn it on, man, they run it. They sell it off too, right? And I just talked about that. We got the new top of the monthly on the dollar. Thing ran down immediately and tested it. I mean, that dollar was way up there. Boop, 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 boom. Test right here. First got a wick to it, bounced up. Then you got a few candles. Then you close some candles below it. As soon as that happened, it flushed right down to that distribution, to the distribution levels. Right? And that is the 95.4% range on Laplace and the second standard deviation normal distribution. No brainer it was going to bounce there. The probabilities are literally telling you that. 95.4% chance you were going to get a bounce, and 68.3% chance it was going to run back to this level, which it immediately started doing. It's all about the probabilities. All about the probabilities. All right.
All about the chicken tendies.
So I see what's he asking in there about people. That's one thing, dude. You'll be shocked how cheap our indicators are, and we'll give you a 2-week free trial. Trust me, for what you get, you'll be like, what the hell? These guys are giving this stuff away. Yes, we are. We are giving it away. That's what we want to do. Trust me. But man, dude, we got code. Our developers, these guys need paid, man. They work a lot. They got full-time jobs too. That's one thing about us. Everybody's like, well, where'd you guys work at? What firm? Everybody always thinks that I've been doing this for my entire life. Dude, we were all retail traders, right? Then you find the VEPS. We start building the system. You quickly shift to becoming a professional trader real fast. I did not work at any firm. This is all self-taught. This grassroots, man. Grassroots volatility traders. That's what we're talking about.
Yeah, we literally just asked ourselves a bunch of questions, asked the Google a bunch of questions, and asked the other people one or two that might, that knew some things about it, and a small group of people, and then honestly, just putting nose to the grindstone, each in our own ways, learned how to do certain things, especially scalping delta, and alpha trading born basically out of that, our ability to figure that out, and then of course how to communicate it to other people, which is helpful. But especially our ability to communicate and to figure it out for ourselves, because as traders, that's what we want to do.
Yeah.
We maybe don't sit here and make the goofiest videos that you'll ever see with all the bells and whistles like all the guys do. But we actually just share actually useful information. So, and that's because we dug our noses deep into the grindstone and figured out stuff that some of it you can Google, some of it you can only figure out from trading experience. There's no other way to learn it. It just isn't. And but now we put together ways to learn it for people like you who are watching this. And we made it available for that reason. So yeah, you can even come and check, like Bilbo said. We even have some tools we make available at no cost, even available right here on TradingView. They're all available on TradingView, right? But like, we give away some stuff for free. We give away all that education for free. Give away a 2-week free trial for our pro indies. And I don't want to show them stuff, but the question was asked: what about the folks who can't afford it? Yeah. Like, we have solutions for that. We literally want people to learn how to do this stuff. Yeah. And if you really show us that you're learning this stuff and you're making every effort to actually do this stuff, and you're making an effort, first of all, if you get it, you're going to get it, and it's going to work for you, and the cost is not going to be an issue because the price is ridiculously low. But even more so, like, we're how shall I say? We're a very understanding group of people. That's why we made these things very, very affordable to begin with. So, yeah, because we all come from different backgrounds, and we're not all professional traders from birth or something. Like, we all have totally diverse backgrounds professionally and everything else. And so yeah, this is a group for traders, built by traders who learned by literally pulling themselves up by their own bootstraps and figuring out how to do this. So yeah.
Yeah, but the whole thing with Chat GPT is that, look, these markets are random, right? The markets are random. So everybody's worried about, AI coming in and screwing up the market, screwing up trading. Not going to happen. No.
Nope.
Everything's too random. You're going to get you. The one thing it's going to do is, because artificial intelligence is being what? How is our artificial intelligence being groomed? They're being groomed by people, right? Until these things start talking to each other. We've got some Terminator shit going on.
Look, the native intelligence that's available to the native information that's available to things like ChatGPT specifically is only up to 2021. You have to do other modifications to make it see current stuff. And even then, you're looking at a kind of semi-ChatGPT experience. And ChatGPT is specifically not artificial intelligence. It's machine learning, which is, I'm not going to say simple, but it's between machine learning, AI, and deep learning, machine learning is by far the least high tech, let's just say, the least advanced in terms of its ability to forecast things like prices on the market. And you'll notice, by the way, obviously they've nerfed ChatGPT a lot. And you can't do things like really ask it to give you. You can fool it to give you prices and things like that. People have done some funny things with it, and people have also built bots with it to trade. But the outcome is usually pretty predictable. They don't work most of the time. For some people, they claim to have worked, or this and that, or their backtesting strategy worked. But then when they actually implement it in real trades, it doesn't work because they're building their tools based on largely price-based information. Because the stuff we have, for example, is not necessarily included in the kind of bots that they're building, right? They're building, so that's something that these bots don't do. And even if they did, I'll just say it again, because of human irrational behavior, things like the inability to limit loss and take profit and get out of trades without being emotionally attached, or not being in a trade or getting into a trade without being emotionally attached, those are limiting factors to most human beings who still have to, at the end of the day, do certain things with their bots. And even if you program your bot to do all these things for you, you still have to monitor it, because what if it goes wonky, and then you have to fix it, and then you have to make a decision that your bot didn't make the way you thought it would. So again, those three basic factors come into play. Limit your loss, take profit, and don't be emotionally attached to your trade. And as much as a bot doesn't have emotions and doesn't care about it, I can assure you, your bot, however fast you think it is by being built with ChatGPT, will not be anywhere in the same league as the speed of the high-frequency trading bots, and that's why you're frankly better off trading manually, in my opinion. It's just my opinion. But I think manual traders have a huge advantage over low-cost, low-rent bots. Obviously, high-frequency traders with massive bots have an even bigger advantage, but as long as we're able to trade knowing the maths that they're looking at, we maintain that edge as well, and we can use it to our advantage as long as the majority of the market doesn't use it properly. And again, even if like 95% of the market or even 99% of the market would suddenly wake up tomorrow and decide, you know what, I'm going to go try out this VEPS stuff because I heard some good things about it, 99.5% of them won't do it correctly. How do I know that? Statistically, only about 0.5% of the people that try this stuff get it. It's a fact.
Yep.
So, and that's not to say that it's not learnable. It's totally learnable, and we make the best tools and the easiest ones to learn with. But still, 99% of people, 99.5% of people, they don't want to learn. That's the problem. They don't want to learn this stuff. It's not a question of can they. Of course they can, if they set their mind to it, if they're serious about it. But they want signals. They want DGen stuff. They want to go to a casino, but instead they're sitting at home, clicking around on a keyboard.
Yeah.
Anyway, yeah, man.
No, exactly right.
That's to answer the question that was asked. That's why I went off on that little tangent there. But yeah.
Let me shrink this up a little bit. Actually, we don't need to do that. So here's a 5-day on SPY. Because I see that in there, but aren't markets efficient, not random? No, man. Very random. Very random.
Yeah.
The markets are random. Look, this is on the 5-day. Let's even do it just from the COVID dump. Bam. The blue is trend, right? The blue is efficient, right? Look at the random market. Most of the time, the market's random. All the pink. And really, the only real times that it's in trend is when this baby is like bright blue. Bright blue. You can see the little trending.
And you can see it on markets too, not just on crypto and stuff, right? You can see it on traditional, like he's showing you right there, SPY, right? Right? Is that yeah? So you can see it like on any asset, and that's a traditional market asset, right?
Yep.
There's volatile assets like Bitcoin and other cryptos that are so new, they're going to be random for another 100 years. And by the way, traditional market assets have been online for a long, long time, and they're still fully random. A lot of the time or most of the time. So to think that markets are efficient, that there aren't inefficiencies to exploit is kind of, no, that's not true. We can visually prove that is not the case with this information. The math just shows it to us. It's entropy, right? What is entropy? It's the distribution of the particles or the bits or the bytes, right, from the center. You can say to me, well, there's no real entropy on a digital asset. Well, but there is. It's a measurable thing. You can measure the entropy of the distribution. It is absolutely random, full bore, especially if you're trading volatile assets, including equities, which are frankly just as volatile as crypto these days in many cases. And we certainly see that on the markets and the entropy indicators. Look at it. Look at the charts. These are not patterns that you could trade successfully by any pattern trading book. These are all things that would get most traders right.
Yes, sir.
But they're hitting levels and they're moving around between levels very clearly, and they're moving in random walks and in trending moves. Look what that green arrow is pointing right there, right? Wow, what a coincidence. It happened to hit a level, an exact mathematical level, not a line we drew in randomly, right? It's not a coincidence that these returns go to precise places and drive the price action to precise places. It's not a coincidence. These bots set their targets. They have big enough balance book or order books to do it, and they move the market to where they want it to go, and then they take their profit.
Yep. And I literally just gave you the play-by-play. Well, I was talking right here before this move even happened, telling you exactly what was getting ready to just happen. And it did. So I put the arrow here. Here was that overhead resistance. I was like, once we got the bounce, right? This is all probabilities. There was a 95.4% chance that this data set's going to close below here. All right, now that's on a daily, so a 15-minute candle can close below here. It's the daily that's not going to. But what did it do on the 15? It kicked up. And like I said, right when it got inside that monthly range, boom, you can literally see the wicks. You can see the little algo battle going on here, sending wicks down to the bottom of the monthly, trying to break back down below it. The bulls weren't having it. Right, boom, they ran it right to where I said they were going to go, and now they literally just closed that 15-minute candle above that range. So this is kind of a no-brainer right now that the dollar is going to run up here to the center of the weekly. Why? It's at the center of the daily too. It's at the center of the daily too. And here's the bottom of the daily range. So this area probably incoming for the dollar. You're going to see everything else spilling out, which you do. See everything spilling out. Down to the bottom side of 68.3 Laplace for Netflix right now. Let's see. Crypto is what's holding, right? Crypto's actually holding, right? Look at traditional. Traditional's just spun. Crypto's holding a little bit. So we'll see. We'll see what happens here. Are we going to get a rejection off the daily, right? The center of the weekly? Or is this baby going to fly? I'm telling you right now, if the dollar gets up above the top of this weekly and starts running, look, it was. Boom. It got up above it, right? But then immediately, when did it get up above it, right? Right before the open, it got up above that weekly range, but the new monthly was down here. So as soon as it opened up, charge down. Why? Because the data set needs to come down and test this volatility range, and it did. Now, boom, it's right back up above it. Cooking. So yeah, pay attention. Could it dump back down below here? Of course it could. Of course it could. That's why you need a workflow. You got to understand where you're at, where the data set's at. What kind of reads are you getting? Is there div building? Right now, we go over here on Dixie. Let's check this out. 5 day. Go do something, little Dixie. But like I said, man, it had bull div, right? You got bull div all over. Not looking strong though. I'm telling you, this move on the dollar is not looking strong. But look, it's random right now. Didn't even start to trend to here down here at the bottom. Even this move right here, that was not even trending, right? You can see when the entropy's blue, it's trending. Let me see here. Where did I want to go? 15 first, just to see. Now look, this is exactly what I'm talking about. So you get a high on the returns oscillator right here on this first nice little move. Dixie goes sideways. We know what was happening right here with these wicks. This is the bottom of the monthly range, right? So the bear and the bull algos are fighting right here. Bulls won, shot right to that resistance level I was showing you. Look at the div that set up. Bear div, right? And right now, when the returns oscillator crosses down the zero mean right here, you're getting this down candle. And the 15-minute, right? It's below the Fisher on the 15, the dollar is. So this is a no-brainer. Get a little rejection here, pull back inside. If it does kick up from here, like I said, if you get the dollar to close up here above 105 area, the dollar could fly. And you're going to see the markets go into a meltdown. Remember what happened the last time the dollar made that run? Was ugly. Very ugly. But right now, boom, you can see that bear div. You can see the bear div. And you got the Z-score started literally from the beginning of this move. The Z-score was having an outlier, and it ran through all these confidence intervals, right? No bueno. You're not going to stay up here long. This baby's going to come tumbling back down. Let me see here. But so what started this move? Here's all the lower lows on the dollar on the 15. Look at all the bull div that was setting up. And when did the move start? Right when the returns oscillator crossed the zero mean. But then you get the high there, right? That returns oscillator flew. Why? You're having an outlier on the variance, having an outlier on the Z-score. But then the returns oscillator, this is what you should understand right now. If you're using price-based oscillators, you're behind the 8 ball, man. You're getting shafted. Look at the returns oscillator going down. Look at price action. Price action was just floating up, right? Price action was just floating up, got into that monthly range, checked up right below the zero mean, got back up above it, right? Had that last pump right there, right when that returns oscillator crossed that zero mean, it popped. Got a nice 15-minute candle to the 15-minute Fisher, the 99 length log return moving average, and we know it got up above those resistance levels over here, right? Which now it's trying to pull back inside it. If you see this get positively correlated, right? The blue candles back here, that means it's positively correlated, right? That price action is following returns. Right now, it's not. If you see this 15-minute candle close in 9 minutes and you get positively correlated and this returns oscillator continues to drop, you're going to see this data set pull back, right? Probably right back at least to the top, or to the top of the monthly, back down to 104. It's already making its way. But this is what we're trying to get people to understand. You need to know the divergence between price action and returns. It's the only real divergence that's going to give you is diminishing. Take your profit. Take your profit. As soon as this would have printed, boom. Obviously, I know where to take profit. If I was trading the dollar, where am I going to take the profit at? A couple different spots. When it bounced off the second SD, I'm scalping it right to the top of the month, or top of the monthly range. And then when I saw this madness going on and these wicks going down through the monthly, I'm on that 1 minute, 3 minute, and I'm getting another entry, and then I'm taking my profit where? Bottom of the weekly. 2 nice little scalps. Entry, profit. Entry, profit, right? Just little moves, man. Filling those little buckets. We're not swing trading the volatility, right? And here comes this dollar. And you'll see all these assets go whoop right back up. I'm getting blown up on every device I have. Every iPhone, iPad. Leave me alone, people. It's an everyday thing. Should just turn my shit off. Okay, let's see here. I'm sure I'm not missing anything though. What's going on with silver? Yeah, up 0.56 now. Apparently, we got copper running again. I do like copper. I was talking about that last week. If I was going to be trading any metal, but that was before silver really took that dump. But yeah, I like copper. Like copper. I know our buddy, the African crypto warlord, likes copper. Yeah, Bob pulled back big time. Good. Good. What's up with Las Vegas Sands? You only got a little bit in the green right now. Meta, FedEx. What the hell is Boeing doing today? Besides just continuing to get wrecked. Where are you? I know I got you on here. There you are. Actually, it's up 0.1. Okay. I don't really see. Nvidia down 0.2 after its little earnings escapade. Yeah, crypto good. Crypto's not going anywhere either, gentlemen. Don't believe the hype. It's a joke. When all these regulators, everybody's talking about crypto, they're stacking their bags, man. They're just stacking their bags. Guarantee it. We know this for a fact. Take JP Morgan, right? Take Jamie Dimon, for instance. The day he literally came out and said, if any of my employees buy cryptocurrency, you're fired. That same day, what did he buy? $500 million or something? Why? Hell, you can trace it big time. These people that go in and start tracking things on the blockchain, when you get good at it, you can't hide, man. You can't hide. It's all traceable. You can go back through time and follow the chain and see what wallet sent this and where to what. And so people need to realize it's very traceable indeed. So don't believe all that crap they're saying about crypto. It's all lies. What else? Let's see here. Anything else we should be looking at? Not really. Waiting to see the dollar did get back inside its 1 SD. This thing just stays here. This will be the ticker for the rest of the day. What is the dollar going to do here? Is it going to pump to the center of the weekly, top of the weekly? Is it going to reject back down to the 95 for Laplace, top side of the monthly range. That's going to determine what's going to happen with these assets. You can see as soon as that dollar just starts creating this doji, man, everything's just like, okay, well, we were going down. We're going to pop a little bit here. We're just going to sit and wait. What's the dollar going to do? Show strength or show weakness? See something real quick. The VIX probably going up. No, so you got VIX just barely up. It was down pre-market. Intraday barely up. Yeah, I mean, this could be a day where the markets really go sideways. Just go sideways. So we got the DXY on the 15. You can see, look, that returns oscillator pulled back up right to the zero mean, right to it. Let me see here on the 33 minute. Right at the top there, setting some bear div. But look at the fishers. Look at the fishers. Look at the Z-score. Random walk. Came out of trend to the downside, right? The dollar, and boom. So when it came out of trend, right? This move back up, this isn't even trend, man. This is just going back into a random walk. Price action just floated up, right? There is a natural drift in these markets. It will drift up. And then when you understand volatility and all the different tendencies that go along with it, you'll realize when volatility is contracting and it's negatively correlated, price action is going to walk up. If volatility is contracting and it's positively correlated to price action, it's going to walk down. When volatility expands and it's positively correlated, you're going to get a nice pump. Exactly the opposite. You're going to get volatility expansion negatively correlated, price action is going to dump. Then you've got two other scenarios where volatility is flat, just going sideways, and it has everything to do with just the correlation breaks. That's what volatility trading is all about. Expansion and contraction, that's all volatility does. It expands, it contracts. Then you have all these breaks in correlation that are going to give you direction on these volatile moves. All right. I think this is about it. We're going to try to keep these to about an hour and a half. Been going almost an hour and a half. Anything you want to add, Yasha?
No, I mean, you really covered it well, dude. All I gotta say is, like, if you're watching this first time or whatever, you're relatively new to this, feel free to watch the stream again, and also feel free to ask us questions. And we were also happy to answer, always happy to answer in the group chats or the Discord or whatever. But like, definitely look it over again. This video is full of great info about how to read these charts and how to figure out how to use our indicators to do this sort of stuff. And again, we're just happy to answer questions if you want and to ask anything. So feel free to do that. And all in all, look at the dollar. I mean,
right at the wave trend.
Bilbo was just saying the dollar is very much in line with, like, look at what it did yesterday. Risk on assets did the funky move when the dollar went one way, the risk on pretty much went the other way. Right. And you're going to see that happen time and again. Not every single time, but you're going to see it happen time and again because the dollar is obviously the counter pair to most trading pairs. So, bear that in mind and look at low time frames for entries and exits because that's where the action happens. And you can pile up a lot and you can fill up a lot more little buckets of liquidity at the end of the day than you can trying to move one big bucket. It's just a lot easier to move little buckets than to move a giant bucket. So many buckets be upon you, filled with liquidity.
Yes. And so 33-minute right here. Right, we had this last 33-minute candle send a wick right through the wave trend, pulled back. Now we're right there again. Right at the reverse wave trend on the 33-minute. With a little bear div. So we'll see. Either this thing powers through, and you can see why. Why isn't it playing out? Hey, but Bilbo, you said there's bear div. This should be playing out. It's negatively correlated, man. And all the fishers are up. If I see one fisher turn down and this correlation go to Zippo and the returns oscillator continue to drop on that little bit of bear div, it's probably going to be when the returns oscillator drops below the zero mean is when you'll get the real move. But you want to see it stop here. If not right here, that is the 33 length and the reverse wave trend, right? Then you've got the 99 length right here. Good luck getting by that on the 33. And you got the power mean band all flipping, was all flipping down here. You still got a couple blue ones, but yeah, if this is going to reject, this is when it's going to happen. In the last, I don't know, maybe in an hour, noon to close, could see this thing turn around and go down. You sure could. Sure could indeed. Let me check one more thing here real quick on the dollar. Where'd this 4 hour go to? That's a hell of a 4 hour candle for the dollar. Come on, UPM, populate, you big coated beast. I got so many messages, it's insane. It's going to take me a half hour to read all this. Come on, UPM. Don't cuck us right at the end. Come on, baby. Think. It's not wanting me to see. What are you hiding? Yeah, just what I thought. So, the dollar in that dump on the 4 hour almost came down to this 99 length here. Boom, kicked up. Where's it at now? The 33 power mean too, right? You got the 33 length log return moving average, and you got the 33 length on the 4 hour, the 33 length power mean. Sorry. Yeah, good stuff, man. Good freaking stuff. So now on the 4 hour, this is actually good, right? Look at this expansion, right? Now the correlation broke down here. Correlation broke positive, but you're at 100 percentile. If this volatility starts to contract and this stays positively correlated, this dollar is going to bleed out the rest of the day. Probably be right back down, probably 95 Laplace, down in this area. 104.2, anywhere from like 104.3, let's say 104.4 to 104.2. Now that's if all that plays out. If that rejection, because it's not going to stay up here long, right? Not going to stay up here long. That wave trend on the 4 hour is a magnet for sure. You will pull back, let alone. So are these monthly ranges, man. This is a magnet right now. If these dollar bulls can't push this thing above this weekly, man, this thing's going to come right back down. If not, go deep into the monthly, like I said before, right? There's the center, 103.7, bottom side, 103, just a tick over 103. So if it really spill out, all right, look for it. The dollar bears, they'll take over, man. They'll run this thing into the dirt. You let them. That's with any asset, right? And that's when you build the divergence. Is when the other side's just getting hammered to the point where the bulls are running, the bears are like, screw this, I'm not involved, right? They're just going to run me over. It's like putting pennies on a train track. So you let that data set just run with no resistance. That's what creates the imbalance. When you don't get divergence building between price action and returns, it's when you got a nice algo battle going on, right? Boom, boom. They're just butting heads. But at some point, somebody's going to win. But the divergence isn't building, right? That's like if you're playing football and the offense is run, defense just lays down. Lets the offense just score and score and score. So what's going on there, right? The defense is just on the field all the time laying down. The offense is on the sideline going, yeah, wear yourself out because we're going to come back hard. And then the div plays out and that data set goes the opposite way when the div's playing out. Just the way these markets work. Just the way they work. Use these VEPS long enough, you will read these markets and people will be like, what the hell? You got a crystal ball? Just like the Coinbase trade yesterday, because I knew. And before I got to this chart, I didn't realize Coinbase's data set was outside the daily range. I was looking at other levels for Coinbase to push to. Then when I got to this chart, you can go to the stream yesterday and literally midstream, I'm like, oh, wait a minute. I didn't see that. I immediately said, look for Coinbase to pull back inside $65 by the end of the day. And where did it close? 65.81 or 64.81. Powerful little move there. And it was all just trusting the indicators, understanding volatility ranges, this, that, and the other. It's a process, man. It's a process. Dump dollar. That's what we want to see. Now, before I take off, jumping quick. I don't want to miss something. Although I'm probably going to do an update. Whatever gets hot in the market here in a few hours, I'm going to do a little update, a little 10-minute vid. Try to do that every day on whatever's hot. Everything's kind of same. No, man. That Las Vegas Sands, it's definitely starting to pump. Let me see something here. I already had a good trade on Wynn and Las Vegas Sands earlier in the year. Had some good trades. Yeah, man, this thing. Power mean band up here. No, got the daily. Yeah, coming off that bear div. Yeah, this thing's got room to run for sure. I mean, look at all that bull div finally playing off, and you get the bounce right on the zero mean. Woo, off to the races. All the fishers are up. Yeah, this thing is... I'm going to be looking at an options trade with LVS, I believe. That thing looks good. All right, guys, gals, I'm going to leave you at that. Like I said, I'm going to do a little update. I'm going to be scanning these markets for the next few hours and see what's hot, right? We're going to do a hot take on one of these assets. If you see something, you can either message us in TradingView, come in the Discord, pop something up. If you want something looked at that I missed, maybe I missed something that was hotter than what I'm seeing. So yeah, I want to make sure I get the hottest asset. It doesn't matter if it's crypto, Forex pair, you know. The dollar right now, you could see some other currencies popping, man. If this dollar shows weakness, gets down into the guts of that monthly range, there should be some good Forex trading going on. All right, guys. That being said, I hope you enjoyed the stream, right? We got the link to our Discord. You can come check us out. We have free education. And all that being said, wherever you live at on this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. See you later on the Market Hot Take.